Let me ask you something. What if gold, the oldest form of money humanity has ever trusted, and crypto, the newest financial experiment, are no longer competing with each other? What if they're quietly merging? Because while most people are busy arguing Bitcoin versus gold, digital versus physical, old money versus new money, something very different just happened. The tokenized gold market quietly crossed $3 billion. No breaking news alerts, no emergency headlines, just a number, sitting there, almost unnoticed. But that number matters more than most people realize, because it may signal the beginning of a new financial bridge between the traditional system and the crypto world. What is tokenized gold? Let's slow this down and make it simple. Tokenized gold means real physical gold stored in vaults but represented digitally on a blockchain. Each token equals a specific amount of gold, usually 1 gram, sometimes 1 ounce. You're not buying paper gold. You're not buying a promise. You're buying a digital claim on real metal. And unlike traditional gold ETFs, it can be transferred instantly. It can be traded 24/7, and it can be used inside the crypto ecosystem. That's the key difference. This isn't crypto trying to replace gold. This is crypto wrapping itself around gold. Why $3 billion is a big deal? Now, $3 billion might not sound huge compared to global markets, but context matters. This market was almost non-existent a few years ago, considered niche, mostly ignored by both gold investors and crypto traders, yet it grew anyway, quietly, steadily, without hype cycles. And here's what makes it important. Tokenized gold didn't grow during extreme greed. It grew during uncertainty, high inflation, banking stress, geopolitical tension, currency questions. Historically, when uncertainty rises, people run to gold. What's different now is how they're accessing it. Who is buying tokenized gold? This isn't just retail crypto traders chasing trends. Tokenized gold is attracting crypto investors who want stability, traditional investors who want liquidity, institutions experimenting with blockchain settlement, people in countries with currency controls. Why? Because tokenized gold solves several old problems at once. You don't need a gold dealer, physical storage at home, international shipping, complicated custody. You just need a wallet, a token, and a blockchain. And suddenly, gold becomes as easy to move as a stablecoin. That changes behavior. Why this is happening now? This didn't happen randomly. 3 big forces are colliding at the same time. First, trust is fragile. Banks are safer than crisis headlines suggest, but trust has clearly been damaged over the last few years. Second, crypto grew up. After speculation, crashes, and regulation, parts of crypto are maturing. Investors want assets with real-world backing. Third, gold needed an upgrade. Gold is stable, but it's slow, expensive to move, and disconnected from digital finance. Tokenization fixes that. So this isn't a gold story, and it isn't a crypto story. It's a plumbing upgrade to the financial system. Is this bad for Bitcoin? And the answer might surprise you. No, this doesn't weaken Bitcoin. It actually strengthens the entire digital asset space. Why? Because tokenized gold attracts a different type of investor. Bitcoin is volatility. Bitcoin is belief. Bitcoin is asymmetric upside. Gold is preservation. Gold is stability. Gold is centuries of trust. When both exist inside the same ecosystem, capital doesn't leave, it circulates. During risk-off periods, money moves into tokenized gold. During risk-on periods, it flows back into crypto. That makes the system more resilient. The quiet institutional interest. Here's the part that rarely gets discussed. Institutions care less about ideology and more about settlement efficiency. Tokenized gold allows instant settlement, lower counterparty risk, transparent reserves, 24/7 markets. For banks, funds, and treasuries, this is extremely attractive, not because it's flashy, but because it reduces friction. And whenever finance reduces friction, adoption follows, slowly at first, then all at once. Risks people should actually think about. Now, let's be honest, tokenized gold is not risk-free. You still have to ask, who controls the vault? Is the gold audited? Who issues the token? What jurisdiction applies? This is not trustless like Bitcoin. It's trust-minimized, not trust-free. That distinction matters. But the fact that this market crossed $3 billion means people are comfortable accepting those trade-offs, at least for part of their capital. Closing. Big picture. Let me leave you with this. For years, the debate was framed like a war: gold versus crypto, old versus new, physical versus digital. But history doesn't move in straight lines. It blends, it adapts, it upgrades. Tokenized gold crossing $3 billion isn't the end of gold, and it isn't the end of crypto. It's the moment they stopped fighting and started working together. And when finance quietly builds bridges, it's usually because people are already crossing them. If you found this perspective useful, consider subscribing. And tell me in the comments, do you see tokenized assets as the future or just a temporary bridge? Because this conversation is only getting started.